Dr. Marc Faber joins us all the way from Hong Kong. He is known for his contrarian investment approach, and he studied economics at the University of Zurich, and at the age of just 24 obtained a PhD in economics magna cum laude. Now, between the years of 1970 and 1978, Dr. Faber worked for White, Weld and Company Limited in New York, Zurich, and Hong Kong. From 1978 to Feb 1990, he was the managing director of Drexel Burnham Lambert Hong Kong Limited, and in June 1990, he set up his very own business, publishing a widely read monthly investment newsletter, the Gloom, Boom, and Doom Report, which highlights unusual investment opportunities. He is also the author of several books, including Tomorrow's Gold, Asia's Age of Discovery. Join me in welcoming Mr. Marc Faber and Mr. Govindraj Ethiraj on India, an emerging markets rebound story.
Thank you very much, Neelam. Once again, let me not waste any further time and hand over to Dr. Faber. And just to remind everyone, for those who don't know, that he had famously predicted the 1987 stock market crash, and that's something that in some ways precedes him reputationally. On that note, it's over to you, Dr. Faber.
First of all, I heard the latest comments of the people that were on your panel before, and they all said, oh, the government should do this, and monetary policies should do that, and so forth. On this subject, I just want to say, I believe in free markets. I believe in non-interventions. In other words, I don't believe that the government should intervene in any way into the free market economy. Now, the free market economy is, as one of your observers said, has a Darwinistic twist. In other words, it punishes failure and it rewards people that are smart and that work hard and make investments, and therefore they do better than other people who don't do these things. So the capitalistic system as we know it in its pure form is a very cruel system. But it is the only system, and I'd like to repeat this, that Milton Friedman said it on numerous occasions. It's the only system that has ever lifted most of the world out of poverty. It has created inequalities, undoubtedly, but if you look at world history, 5000 BC, that became recorded history, until today, it's the capitalistic system that allowed poor people to move into a middle class to live higher standards of living. And we always talk about the wealth inequality. I agree with you, it's gone far too far, but not because of the market economy, but because of monetary interventions that have actually made some people very rich. But when you think about it, in the Middle Ages, the feudals, the kings, they were eating very different food than common people. Whereas nowadays, the richest man in the world, he drinks a bottle of Pepsi-Cola or a can of Coca-Cola, and it's the same beverage as the worker would drink. Or he smokes a Marlboro cigarette, the same cigarette as a poor person would smoke. So we have many things that have been improved enormously, and never before in history has the poverty rate, and it's still too high when I consider it as a Christian, but it's much lower than it's ever been before. So I think the capitalistic system has done quite well, but it's in the process of being destroyed by government interventions, including monetary policies. But when you ask me about the global economic outlook, I have to say that we had a man-made recession-induced collapse last year, at the beginning of the year. They called this because of COVID, but it was the action of governments that made COVID much worse. And essentially, and we have to see this very clearly, never in history has any government ever told the population, you must stay at home, you can't go out, and violated people's right to earn money. Many small businesses were completely destroyed, and I know many people whose life has been bankrupted by government interventions. That has to be said very clearly. The economies are now recovering somewhat. I doubt they'll go back to the level of prosperity we had in 2018, 2019, with some exceptions. So if I break down the global economy in 4 parts, Europe, then we have the US, Canada, Latin America, and Asia. In Europe, the economies are going to recover from a low level with a lot of government interventions, large budget deficits, strong monetary policy impetus, as well as fiscal impetus. But I don't think it will be the same as before. I mean, I'm an economist. I watch what is happening on the street, and I can tell you a lot of people will be suffering, as they have already suffered, and it will continue. A lot of people are losing their jobs, and then once someone in Europe is 50, 55 years old, he loses his job. He's not going to find another job at the same salary level. So I think there will be some recovery, but not that much, not to the previous peak. I think in the US, it will depend on continuous government support. We have already introduced, in my opinion, MMT, this modern monetary theory, where they claim that government debts don't matter. It will matter, that I can assure you, but maybe not right away. But it started to show up in a rise in interest rates. And on the 10 years treasury note today, the yield is more than 3 times higher than at the low in August 2020. So we have to see this very clearly. But there'll be some recovery. As I said, for the average person, probably not to the peak of 2018, 2019. And in Latin America, there'll be some recovery, but not much because of the high debt levels. These countries will continue to suffer somewhat. There is some recovery in the agricultural sector because agricultural prices are rising. And in Asia, we have essentially the bright spot. As you know, in India, the recovery has been quite firm. In China also, whereby there is a slowdown. And the other countries are also recovering. Countries like Hong Kong or Singapore or the Philippines, Malaysia, Thailand, they're not going back to the level of economic activity we had in 2018, 2019. That is pretty much out of the question. So the economic outlook is muted, but I think that we are here as investors. The economies are not that important nowadays for the so-called asset markets. We are involved in asset markets. This panel or this conference is basically about how to make money. As undesirable as this is a subject when you look at it from a philosophical point of view. But I think from a money point of view, the huge liquidity injections we had into the system mean that there are one bubble after another. We have these like volcanic eruptions in stocks, in bonds, in commodities, in shipping, in cryptocurrencies, in NFTs, in anything, anything that can be bought and sold in a marketplace comes out suddenly like a volcanic eruption, shoots up, and it doesn't last very long before it then collapses. And this is the tragedy, that the whole generation in the Western world is brought up with the belief that, well, why should I go and work for a salary of, say, $2,000 a month or $3,000 a month, when I can speculate and make a multiple of that overnight in Bitcoins or in GameStop or whatever stock is available, and that breeds then a generation that is not particularly work functionable. They are speculators, and that, from a longer term point of view, is of course a disaster. And there I have to say, I'm far more optimistic, and I've always said that I would rather invest in India than in the US for the next 20, 30 years. And I maintain this view. I think India is well placed, but here I have to make a condition, and this is very important, and I hope our listeners or viewers will discuss this matter with their friends and also with government officials. In this respect, I want you to briefly consider the world before the First World War, how Europe was positioned at that time, and also the world before the Second World War and after the Second World War. And I just like to say, benefited the most from World War I and World War II. And I think that Asia has an exceedingly bright future if it prevents interventions from other countries into its future and into its economic development. And we've seen the disastrous consequences in Asia of foreign intervention in the 19th century and beginning of the 20th century. And I don't think this should be repeated. I think if we can achieve peace in Asia and avoid the intervention of people that still have this brain damaged imperialist view that their country is above everything else, that their country is an exceptional country, that we can look for a very bright future. I don't see any reason why China and India should have hostile relationships with each other. Any difference can easily be settled through negotiation and through common sense. But of course, if foreign powers intervene and believe that through war they could get an advantage, then all bets are off the table. That I want to say very clearly. We need peace, and then the future of Asia, including industries, including the standards of living, including financial markets, will perform well. And war will have a devastating impact, and it has to be avoided at all costs. So this is broadly my view. I think Asia will continue. When I wrote my book in 2001, Tomorrow's Gold, Asia's future, or Asia's age of discovery, my view was that Asia would become the center of the world. And I think there's no question that nowadays the Asian economic bloc is by far the largest economic bloc in the world, and also the economic area, the sphere that is still growing and still has a huge growth potential. But as I said, we need as little as possible government interventions, and we need peace. So this is essentially what I briefly wanted to say, and I'm open now to any questions you may have.
Fastest in the next 3 years. That's India, China, Russia, and South Africa. This is for those who are watching. It's a poll question. Let's see what answer we get. To you, Dr. Faber, the question, and I'll combine it with a question from Hiral Parekh. He asks, what are your views on government interfering in central banks' decisions in major economic actions? Second, how do you see India as an emerging market destination for investments? And I'm assuming this is now in the context of Asia, which you've, in any case, pointed out as a very promising region or bloc.
Well, concerning government interventions, I'd just like to say this. Between 1800 and 1900, the US economy grew at a much faster rate and incomes per capita increased much more than in the 20th century when we had the central bank, which was introduced in America in 1913. Interestingly enough, the central bank in America started in 1913, and 2 years later we were in World War I. Something to consider, or at least to think about. And, another 4 years later we had the Russian Revolution, which was, I have to say, this is not my invention, this is a historical fact, was largely financed by American finance, by Wall Street, actually, by Jews on Wall Street, because Trotsky had been at the time in the US and raised money, and the US facilitated his return to Russia. We have to see this very clearly. So anyway, what I wanted to say, in the 19th century, there was very little intervention. By 1913, these are official statistics, in none of the European countries, nor in the US, did government expenditures exceed 13% of GDP. In other words, the government, including federal government, local governments, state governments, municipalities, and so forth, all this was very small as a percentage of the economy. Nowadays, as you know, it's difficult to measure, but in most European countries, we have the government at over 50% of the economy. Some countries that are relatively better off, it's about 40% of the economy and so forth. But we have very heavy government intervention. And there's a big question in all this, you know, for 5,000 years of recorded history, we didn't have democracies. And now suddenly everybody thinks that democracy is the best system. It's an untested system. and so far the prospects are not looking very promising. But we have some democracies that function reasonably well, like Norway, Sweden, Finland, Denmark, Switzerland. But I'm saying relatively well. In these countries, you don't have a strong economic growth, but you have a relatively high standard of living. For how long, for how much longer, we don't know. But I can also say that in Hong Kong, in Singapore, in Taiwan, in South Korea, we reached high standards of living without democracies and so forth. So it's a difficult subject, but in general, I would say, and you Indian listeners or viewers, you all know that businesses do this, businesses do that, and the government makes it difficult. That is the pattern everywhere in the world. The government interferes, and everything the businessman does or the small entrepreneur does is more difficult. And that then obviously reduces the growth rate of an economy very clearly.
Right, and that's something that our previous speakers referred to as well. The pressures faced by small and medium enterprises. Can I quickly bring in another last question because we're almost out of time. This is from Rima Ray, the head investment specialist, private banking at Citibank, and Rima asks. Says you mentioned that you would prefer India over the United States for the next 20 years or from a 20-year perspective. However, what are your thoughts on some of the other economies in the emerging markets, especially within Asia and in the context of China versus India?
Yes, I mean, this question takes me an hour or 3 hours to respond because, as you know, we have in Asia, in the south, Australia, New Zealand, and then we have in Southeast Asia, Indonesia, Malaysia, Myanmar, Vietnam, Cambodia, Thailand, and so forth. Then in North Asia, South Korea, North Korea, China, and Japan, Taiwan. So it's not an easy question, but I'd like to say as a general observation, I think people or investors are not sufficiently weighted, whether they like it or not, politically and for whatever reason, whether they like it or not, they are not weighted enough in India and in China, very clearly. I mean, I have a lot to do with wealthy families, billionaires, and family offices. They may have or hold 70% of their assets in American blue chips or European blue chip stocks and so forth, but very little in India or in China. That when you look at the markets, we don't talk about money here, but we look at the market size in terms of population and in terms of usage of, say, of mobile phones or the internet and so forth. They have very little money in these countries. So I'd say they should overweight these countries. Number two, and this is more a timely question. As you know, we had demonstrations in 2019 and 2020 in Hong Kong, and right. The climate soured and so forth. I don't think foreigners realize that Hong Kong belongs to China, and as such, its future is within China, not as a city that is run by some American woke journalists. So I believe that at the present valuations, a lot of Hong Kong companies are very inexpensive compared to the potential future of Hong Kong within the so-called Greater Bay Area, which is an economic zone between Hong Kong, Guangzhou, Macau, Dongguan, and Shenzhen.
Right.
Shenzhen was a village, if nothing. I went there in 78, there was nothing. Today, it has a population that is larger than Hong Kong, and its output, GDP, is larger than Hong Kong, and it's home to many of China's leading technology companies. So the world is changing, and we need to not invest the way the world was 50 years ago, but the way the world will be in future. And that's why I say I'm very optimistic still about Asia. The
Right.
valuations in some cases are not that low, but the future potential is huge. With the proviso, I said we need peace and we need to be left alone of foreign interventions.
Right. Dr. Faber, we've run out of time completely. Thank you so much for your insights. Thank you for joining us all the way from Hong Kong. Do wish to hear you again. Thank you for your wonderful perspective, fusing history over several centuries and leaving us a few lessons on what we could understand from it and whether history, unfortunately, could repeat itself. So on that note, thank you. The poll answer, which of these BRICS nations could grow the fastest in 3 years? India, China, Russia, and South Africa. Almost 80% home crowd have said India will grow the fastest. And I guess that's somewhat in consonance with our speaker today as well. But 17% China, Russia, and South Africa, not so much in the reckoning in this poll. Okay, thank you very much once again. And it's back to Neelam.
Thank you very much for having me on your program. Bye-bye.
Thank you very much, Mr. Faber and Govindraj, for that thought-provoking conversation.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.